Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. Before we go ahead into this podcast, I'd like to state the disclaimer clearly that whatever stocks we discuss in this podcast are intended only for educational purpose, should not be taken as an investment advice. Well, let's look into Nifty's daily chart to get the overall market picture, how the Nifty is behaving and overall India's market is doing at this current moment. Nifty is currently trading around 18,300, 400 levels. That is 200 points off highs when compared to 18,600, which is the all-time high, which Nifty made in October last year. On the other side, other major benchmark index, Sensex, already made a new all-time high. Some of the major sectoral indices, Nifty Bank, which has a higher weightage, is also trading near its all-time highs. So if you look at the overall market breadth, it's clearly market is at new all-time highs. There is more bullishness rather than bearishness. If you look at the Nifty index in depth, the last 3-4 sessions, Nifty has not moved anywhere. It has been trading in a very narrow range and it is closing very closer to the previous day's closing. On the volume front as well, Nifty volume has also been coming down. There is no major action on the institutional front as well. When the Nifty is advancing higher, we want the volume also to be on the higher side. That indicates fresh institutional investors are taking action, participation in the rally. That is what is needed in the rally, because whenever institutional investors participate in a particular rally, they are expecting the market to rally further from the current position. But that is not seen here. That is because majorly macroeconomic front, the factors are not looking good still. Inflation has been a major problem in the global scenario for the last 4 to 5 months. However, it has been coming down, but even in US, Australia, Europe, everywhere the problem is persistent. There have been analysts have been talking about inflation being peaking in the current season, but in Europe, UK, inflation has been coming higher still. So that is a major sign of concern. In India as well, the inflation doesn't come down. We might expect a few more rate hikes, which will definitely hamper growth, because the interest rates are nearly already at highs. So if the RBI comes in and increases repo rate again, then definitely the spending will come down. Capex plans will also be halted by the private players, because the cost of funds will definitely increase if the interest rates are higher. Coming to the market status, we are in confirmed uptrend. Last Friday, we have changed the market status to confirm uptrend because Nifty has advanced, has given a follow-through day. And we have been adding stocks to model portfolio as well prior to follow-through day as well, because of a rule that is Nifty reclaiming the previous rally high, that is 80,090 levels. That is when we have turned on the switch to buy stocks to model portfolio. And we have added few stocks to portfolio, and some of them are doing very good, and there have been some laggards as well. So we are closely monitoring the market, and we are looking for fresh breakouts which are very strong on fundamental and technical fronts to add them to model portfolio. And within the model portfolio stocks, we will be looking for weakness, and some if the stocks are not performing well, definitely will weed out them from the portfolio. Some of the companies which are in news today are Vedanta board is meeting on November 22nd to discuss the interim dividend for the investors. PEL Bharat Electronics has signed an memorandum of understanding with the armoured vehicles. So they are trying to discuss and they are trying to look for opportunities where they manufacture products which can be of demand in both the domestic and export markets. Ultratech Cement has commenced its operations at its Birla Wall plant in Rajasthan. The capacity is at 4 LMT per annum. Coming to global news, that is UK's Chancellor has revealed a statement regarding their growth rates and inflation rates. They're expecting a growth of 1.3% for 2024, 2.6% for 2025, 2.7% for 2026. On the inflation front, they're expecting inflation to be around 9.1% in 2022 and 7.4% in 2023. So they are expecting the inflation to peak out in this 2022 itself, because they're expecting a lower inflation in 2023. So this has been a global scenario. Most of the analysts across the globe are also expecting this inflation, which has been at all-time highs, will be definitely high going forward, and they're expecting the inflation to ease going forward. Coming to the institutional activity in Indian markets yesterday, FIIs, foreign institutional investors, have bought more than 618 crores of equities. This is on net basis, that is the difference of buying minus selling. Similarly, domestic investors have also bought more than 450 crores of equities in the Indian market. Overnight, US market has closed on the negative bias. You can see Dow Jones closed flat with just 0.02% of lower closing, whereas S&P and Nasdaq closed 0.3 to 0.4% lower. Asian markets are trading mixed. There is no clear trend in the markets. Shanghai are trading 0.4% lower, and Nikkei and Kospi 0.2 to 0.6% higher as we speak. USD INR has been trading at 81.5 rupees per dollar, whereas Brent crude is coming down. Actually, it is trading at $90 per barrel, which is a good sign. RBI has estimated in Brent crude basket average around $105 per barrel. So definitely anything below that is definitely a positive for Indian markets. Our fiscal deficit will not get hampered, which will improve actually. Indian markets are also indicating a flat to positive opening around 18,417 opening might expect. If you go by the SGX Nifty, Asian markets are also trading on the higher side, both the Nikkei and Kospi. So we might expect a slight positive opening around 20 to 30 point higher opening, but we are not sure about the direction clearly, because there is no major trend in the markets. As soon as the market opens higher, if the opening gains are sustained, definitely we might see a few breakouts on the broader space. And if that happens, we'll be looking out for stocks which are looking very good, both fundamental and technical wise. For the sectoral coverage, if you look at most of the sectoral indices have been changed to rally because they have given good follow through days. Only financial services and energy are in under pressure and rally attempt respectively. Other than that, all the other sectoral indices are in rally. Broader market indices, that is Nifty, mid cap and small cap, are yet to give a follow through day. Actually, they are in under pressure now because of elevated distribution day count. Mid cap distribution day is at 4, and small cap distribution day count is at 2. And most of these indices are also trading above their 50 DMAs. And just Nifty IT is trading 1%, 1.9% below its 200 DMA. Other than that, all the other indices have been trading at 200 DMS, which is a very good sign. We want the Nifty IT also to participate in the current rally, so that broad-based buying will happen, and definitely that will give a more push to the breakouts, and the probability of breakouts will definitely increase if the broad-based buying happens in the market. For the chart of the day, we have picked the SKF India, which is a major company which is involved in the manufacturing of bearings and gears. There has been very good demand for the bearings and gears because they are used in multi sectors. So the demand has been coming from various sectors for these bearings and gears. So these stocks are definitely under limelight, and the stock is breaking out from its stage 3 double bottom base. Yesterday we were looking at this stock for addition, but the volume has not come up. It has been below average, and in the today's session the volume comes up, definitely we'll be considering this stock for addition. If you look at the ratings wise, the EPS of 78 indicates a very strong, fundamentally strong company. Price strength is at 75. Again, a very good indication of stock being outperformer when compared to the other stocks. Accumulation distribution day rating is at A plus, which is a top class rating in the category. Again, indicating a very good demand for the stock among the investors. Other major factor, that is number of funds invested in the company, has also been growing consistently. You can see in this portion from 173 in December 2021, it has increased to 198 by the end of September 2022 quarter. We would like the institutional funds, number of institutional funds invested to increase, and that gives a fresh hope and belief that fresh investors are taking positions, and these guys will definitely support the stock if there is any weakness in the general market. So that is the reason we look for institutional sponsorship for any stock. Overall, this stock has been looking very good. If you have this stock in your portfolio, you can consider holding it, and you can keep a stop loss regarding the buy price you have taken. Going with the charts, 50 DMA can give a good support from here. If that level is reached on higher volume, you definitely consider exiting the stock. Thanks for joining today's pre-bill. We hope you have a good trading session. Thank you.